This is an emergency talk, by the way, and that's not something that we usually do during these meetings. But you know, since we had a bit of a lack of speakers, I thought like, okay, you know what, I'm just going to tell you what is it that I am doing, and because we have few new members, I'm just going to explain briefly that my background is in biotechnology and chemical engineering. But I am now working for engineering consultancy that deals basically with project program management and cost management on building and infrastructure projects. And this is purely to give you a bit of a flavor of you know what my life evolves now around. And literally yesterday we have published our quarterly report. It's called UK Construction Market View, and it's always.
Agnieszka, we can't see you. Can you?
If you can't see me because I just stopped my video so that you focus on my slides and not on my mimic.
Oh, silly girl.
Yeah. So we've just released another report, and this is the report that sort of summarizes, you know, the economic situation in the UK. It looks at the construction prospects on what is happening in the construction sector. And the core of the report, sort of like, you know, the essence are the inflation scenarios, because what every cost manager is going to tell you is the essence of their job, is that when they sign a 5-year or 10-year long contract, they need to plan how the prices in construction are going to be increasing. And this is basically what this is about. So I'm sorry, there's not going to be any of biotechnology or chemical engineering in it. And please treat it just as a sort of, you know, as a one of something different. So basically now, if I can just learn how to operate this, yeah. So we start with the economic outlook, which I think this picture is really nice, and because it basically shows that the grass is still green, but we have absolutely no idea what's coming. And we usually start when I'm presenting it. What I usually do is I start with looking at the global economy, and these two lovely graphs that you see are looking at, basically there are institutions that are looking at the global output in particular sectors, are looking at the sentiment of businesses, are measuring it on a monthly basis. And it's almost like, you know, every X day of a month, you sort of go to a website and you go like and check, okay, what's happening. And obviously with the whole COVID situation, that has become even more interesting, because we are now, I think, in the majority of countries are sort of on the path of easing the lockdown and beginning to recover. And this is actually quite interesting, because we want to see, okay, are we on the path to go back to pre-COVID times, or, you know, everyone is just sort of now asking how is it going to evolve. So this is just basically to show that, yes, we have seen sort of, you know, from April, where we got this absolute sort of, you know, lowest of the low, each economic indicator went down, outputs basically stopped, because if you don't have factories working, if you don't have shops open, if you don't have businesses working, everything goes down. We see that now they are coming up. So this is something positive. Obviously, you have industries that are better off, like pharmaceuticals, biotechnology, chemicals. You have the ones that are less optimistic, like real estate. But the watch out here is that, you know, it's not about becoming very optimistic and saying, oh, yes, we are back to where we were a couple of months ago. That's not yet the case, I'm afraid. And when you look at the UK, and this is just yet another graph that basically talks about output and sentiment. And just an interesting bit on the right hand side, this is basically the growth of the economy in the UK, and you can see this very sharp basically dip that happened because of COVID, and now we have this tiny ray of light that basically indicates that we've entered the path to recovery. The challenge that we have, and this is something that comes probably in the next slide, is that when you have a situation where you actually have to stop majority of the economy, what happens is that you're effectively stopping supply, because you're stopping people who supply services, who supply goods, but that will also have an effect on the demand, because suddenly people will realize, okay, well, I guess I'm not going to be buying a new car. I guess I'm not going to be buying these clothes. I guess I'm going to be saving more money. Now, if you are restarting economy, the challenge is that you can enable supply. So you can open shops, you can open, you can open car shops, you can open restaurants, but it does not necessarily mean that the demand is going to instantaneously come back to where it is. And this is quite interesting graph taken from Bank of England, where they show how much each of these sectors is contributing to the growth domestic product in the UK. And what this shows is that, if you look at these green fields, these are things that even through COVID lockdown were still available, because you could still order your clothes online. You were obviously still buying your food and drinks. Then we have the yellow ones, which are the ones that were closed, that are now just beginning to open, but we mark them in yellow because they are in this quite challenging situation where, they are opening, but the demand is not yet there. And then we have the red ones, where basically you say, okay, well, we know that people want it, but it's not yet that easy to open it. And everything that the essential message here is to say that, okay, at this moment, we still have sectors that are not, so to say, fully working. So you can't really expect that you're going to have instantaneously a recovery to pre-COVID times, because, basically we don't yet have the conditions to do it. And then what economists start doing when they enter uncertain territories is that they start preparing scenarios. And the good thing about scenarios is that you usually prepare some assumptions, and you tell people, okay, this is what is going to happen, provided that this, and this. So we started when the whole COVID situation started, we had 6 scenarios for recovery, because the biggest question, of course, is now, okay, are we going to is the economy going to recover, or are we going to suffer for a couple of years from the pandemic? Now we only have 3 scenarios that we think are quite plausible. And the one that you have on the very right-hand side is the one that actually depends on the second wave of COVID. So you have that dip down where we had the first wave of pandemia, then it starts going up. And now if we get the second wave, then it's going to go again down. And then we'll have to sort of, we're going to have to start recovering again. And this is quite interesting, because we don't really know whether this is going to happen. The one on the very left-hand side, on the other hand, we think that luckily it's not something that we're seeing, because that would mean that basically you start opening economy, but there is no demand, and therefore everything is just slower. So we think, and at Arcadis, we think that the most plausible scenario is this Nike swoosh. It's a very, very nice name promoting Nike, which means that yes, we are seeing the recovery. However, it's going to take time, and by time I mean like 2 to 3 years to reach the levels that we had pre-virus. And then what it means for construction, I'm just going to try to fly through these slides. So one of the things that we do is that we participate in something that's called the association, the Construction Products Association. And what they do is it's a group of people who basically range from people who know about the most up-to-date planning consents through people who sell tarmac and mortar and bricks. And you get them at the table and they are discussing, okay, what is going to be happening in particular construction sectors. Now, obviously, what you see in this picture is a message that, well, it's not really that good, because we expect that probably this year, the total output in construction is going to be down by 25%. So what it means is that compared to previous year, we're gonna probably get hit of 1/4 of construction output that's gonna be down. What you also will notice in this graph is that the sectors that are most predicted to be hit are the private ones. So the private housing, repairs and maintenance, commercial sector, these are all sectors that are very much depending on the social distancing. So we know that there are projects for commercial sector, but they are now all being redefined and rethought, because if suddenly you get the rules of social distancing, you start asking yourself, okay, does it still make sense to build a new hotel? Does it still make sense to build a new cinema? With private housing, with the repairs, the challenge is, if you imagine that you have to put X number of people on a site to build houses, they will have a challenge of keeping the distance to stay safe. So basically, that is the forecast. And we also see that there are many, like construction is one of the biggest sectors that actually is using government support. There are many people that have been furloughed. There are many people that are on a self-employed support, just because I think it's like 60% of people are self-employed within the construction sector. So we are getting a bit worried that, you know, if they don't get sufficient support throughout these difficult times, we may end up basically not having enough of construction people to do all the jobs. The positive thing is that it seems that many Polish people and many people from Romania are settling in the UK. And this is usually where I make the joke about Romanians playing accordions and Polish people doing construction work, because we are not very good with accordions or violin. And that is especially for London, that is sort of, you know, in a sense, good news, because especially in London, this is where the migrant construction work is very high. Then usually what we do is that we're looking at what's happening with the basic materials to construction. There's to be honest with you, there's not much interesting stuff happening. It seems that, you know, that despite COVID, materials are sort of following the expected path, and with the insulation materials that are always growing in the prices as quick as they can, they are just following. Whereas, you know, you will have some metals and then other bits that are going to sort of stay on the same level. And one other thing that you know that we're looking into is as well. This is you don't have to read that slide, but this is looking at the main contractors, so at the big companies that are building that are responsible for building infrastructure and buildings. And what it shows is that they have very low levels of profitability. And the reason to worry about it is that if these companies do not make lots of profit, which normally they do not, they don't have much reserves to invest and to protect themselves if they are in the situation like this, where suddenly they have to start closing construction sites, suddenly they can't continue working, and the money is not coming in. So this is yet again something that is quite tricky. I'm going to skip this, and I'm just going to briefly tell you how we set up inflation scenarios. Basically, what we do, and I'm just going to show you two last slides, is that when you look at the prices, any type of prices, but in this case, construction, you're trying to think, okay, what are the factors that are going to drive my prices up? And what are the factors that are going to drive my prices down? So what we do is that we always prepare this table and we go like, okay, so what do we see is happening? Now, what possibly will drive the prices up? So we see that because of COVID, productivity is becoming lower, because you can't have that many people on site. They have to keep the distance. They are probably working slower. So this is something that's going to increase your prices. Basically, what that means, all the investment that you have to do into, say, extra safety things, that is also driving your costs up. If sterling is weak compared to dollar or euro, you are going to be paying more for your materials. That is, again, driving prices up. If you do not have enough of contractors, if you do not have enough of people to work in construction sector, those that are in the sector want to earn more. That is, again, translated into higher prices. But you also have things that are actually driving the prices down. So that means that, okay, if suddenly government says, well, sorry, we can't really go ahead with HS2 because we have other things to do, this is where the sector goes like, okay, we don't have that work. We are going to have to be more competitive to win other projects. So we're going to start looking at lowering our prices. The other thing is as well, if you look at commodities, usually if they go down, then the prices go down, and so on and so on and so forth. And the really the core and sort of, the essence of my life in the last 2 weeks was the preparation of this lovely table, which you may just sort of look at and go like, oh, what the hell is that? But this is like the holy grail of cost managers and consultants, where we tell them that we expect basically that in the next 2 years, approximately, the prices for construction will go down, and then they will slowly start recovering. And what it means is that then they will go to their clients and then they will start telling them like, okay, look, there is an opportunity to actually get stuff built cheaper, but you have to bear in mind that it's going to be more risky because it's going to be still in the COVID times, because you still don't know, whether you're not going to in the end have to pay more. And this is where you start shaping the whole things and the decision and the market. And it's a bit like a ping pong, because you put it out there, you have cost managers and other people looking at it, making their decisions, but also how these numbers actually shape depend on the decisions that these people are making. So yeah, so that's going to be it. I'm not going to be boring you anymore with this. It's pretty different to biotechnology.